Hello, everyone. Welcome to our latest Alta Insights webinar. I can see I have the wrong thing showing on my screen, so I apologize for that. I'm Jeremy Yohe, Alta's Vice President of Communications, and thank you for joining us today as we're going to learn about how to approach a mechanics lien risk. Apologize for the slight delay. We had some tech, audio, video issues that we had to work through, and one of our speakers' cameras still isn't working working today, so we were joking that a mechanics lien was placed on the camera. Anyway, so definitely a popular webinar. We had nearly 500 people registered, so thank you for taking some time to learn more about mechanics liens and commercial transactions. If you're looking for some CE/CLE, we are offering that for this course. I'll provide the link to submit your information for CE/CLE at the end of the webinar. If you have any questions during the presentation, so submit them in the questions box. We'll hold some time at the end. Sorry, I'm trying to talk fast so we can get through this housekeeping information quickly. To meet state compliance, we'll have a couple of poll questions during the webinar to make sure you're paying attention. And with that, I need to thank DataTrace for sponsoring today's webinar. I have a short message from DataTrace before we introduce today's speakers.
Meet Starter IQ, the national AI-driven starter policy marketplace from DataTrace. With a single search by address, APN, or owner, Starter IQ evaluates millions of prior policies, ranking and recommending the best starter instantly. Starters on all properties are evaluated, ranked, and served via visual indicators, the highest ranked starter on every parcel. With over 40 million starters, Starter IQ shortens turnaround times, lowers costs, and reduces errors through verified, policy-backed data. With Starter IQ, your data works for you. Contribute policies, commitments, or prelims, and earn revenue when others use them. See how fast finding the right starter can be. Request your Starter IQ demo today.
All right, thank you, DataTrace, for that message. All right, let me hand over controls here. All right, Neil, you should have control. You can share your screen, get that set up while introducing the two of you. Join us today. We have Nancy Landmark. Unfortunately, as I mentioned, her camera is not working, but Nancy is Deputy Chief Underwriting Counsel for Stewart Title Guarantees National Commercial Services. Nancy began her legal career in private practice, and after leaving private practice, she worked for both title agents and title insurers underwriting transactions. Nancy is a frequent presenter at continuing legal education seminars in these areas. Also joining us today is Neil Higgins. Neil is National Commercial Underwriting Counsel for First American Title Insurance Company. Sorry, I got a message that no one can hear me. Neil, can you hear me?
I can hear you, yes.
Okay, fantastic. All right. Neil is co-chair of First American's Mechanics, Liens, and Oil, Gas, and Minerals Underwriting Practice Groups. Neil practiced law in Maine, handling various real estate matters before eventually joining First American in 2016. With that, Nancy and Neil, I'll turn the conversation over to the two of you.
Great, thank you, Jeremy. Just a quick qualifier before we get going. The material we're going to talk about in today's presentation, not necessarily dispositive of either First American or Stewart or any other title insurer's position on mechanics liens. We're going to be talking about mechanics lien issues generally. As I'm sure you can imagine, the mechanics lien laws are different in all 50 states. So we're going to be taking a high-level view on mechanics lien underwriting, especially obviously in commercial transactions. So Nancy, do you want to jump in at all there?
Yeah, the one other thing I would say is every decision that's made on mechanics lien coverage is very fact specific. So what works one time may or may not work the next time.
Very true. Okay, as we get started, I guess the first question is, what is a mechanics lien? I know, basic question, but important to understand. It's a lien that's created by state statute, and it's to secure the priority of payment for work performed and materials furnished to construct or repair improvements to land. So it's a form of, it's a protection in favor of builders, contractors, construction firms that build or repair structures, and mechanics liens can also extend to suppliers of materials, as well as subcontractors, and cover building repairs as well. So the basics, mechanics lien statutes, again, they arise from a public policy, and it's to protect laborers and their suppliers above and beyond the normal contractual remedies that are borne out, and the mechanics liens are borne out of principles of equity and the avoidance of unjust enrichment. So typically, a party's right to sue would solely be limited to the terms of their contract, and the basic rules of privity of contract would control. So the nature of construction, however, that may include a party that fabricates or obtains materials, and they contract with a subcontractor. So you have a sub of a subcontractor that are contractually related. There could be a contractor that contracts with the general contractor, and then a general contractor who contracts directly with the owner. So as you can see, there's different contractual relationships. And if, say, a certain party cannot pay or fails to pay, and there's no privity of contract, say with the fee owner or the interest that the construction is being done for, there may not be an effective remedy under strict laws of contract. So these statutes were enacted to provide these parties a greater remedy in the event of non-payment for their services, their labor, or their supplies, just above and beyond contract law. So different types of liens. We've got an inchoate interest or lien and a coate interest. So what is an inchoate interest? It's an interest which is not a present perfected interest, but it may ripen into a perfected interest or lien if it's not barred, extinguished, satisfied, or divested. So it's really the off-record lien risk. When we talk about off-record lien risk, it's this inchoate interest that we are really talking about. The coate interest or lien, now that's where all conditions precedent have been satisfied and is perfected, so that nothing more really needs to be done or needs to occur in order for it to be enforceable. The underwriting problem that this presents is that inchoate liens can ripen into a coate lien interest, and thus obtain priority over a recorded instrument, whether that's a deed or a mortgage that's been insured. So who are some of the parties that may be entitled to file a mechanics lien? So professional services, here we've got a list of certain types of parties that may be entitled to file mechanics liens. When we're talking about professional services, this generally speaking is talking about architects, surveyors, designers, landscapers, and engineers who provide services. And that may include, the preparation of a design plan or things of that nature. So contractors and subcontractors, I'm sure everyone on this call is familiar with those parties, but a general contractor is typically the party that is directly contracted with the owner. The general contractor or direct contractor They're typically the ones that are handling the overall project, the construction project. And then a subcontractor, this identifies a party who has contracted with the general contractor to supply some portion of the project, whether that's plumbing services, drywall, framing, things of that nature, site work. Material men and suppliers, as you can imagine, this term refers to parties who provide supplies, materials, equipment, that may even be rented equipment, and specially fabricated materials for a project. And then laborers, this term refers to parties who generally provide the labor and work on a project. So lienable work, there's numerous categories of quote unquote work that may permit a party to file the claim of lien. And we've talked about some of these already, but types of work that can be claimed, again, subject to state law or state nuances. They include labor, services, materials, and professional services for the improvement of real property, materials incorporated into the site, including material, fixtures, or tools. Could be solid waste collection or disposal, especially fabricated materials, carpets, appliances, things of that nature. It can be a very broad category of types of work that can be claimed. Hard costs versus soft costs. Hard costs are charges that are directly related to the actual construction of the project. So it's really specific materials or labor that goes into the project. Soft costs, if anyone has seen, a budget or sources and uses in a particular construction transaction you've been working on, those typically include costs that aren't directly related to that construction budget, but it could be design fees, inspection fees, permits, architectural fees, feasibility studies, environmental costs, things of that nature. Demolition and repairs. So it's important to note that not all projects are new construction or the building of a new structure. Making repairs to an existing building or even demolition and removal are also considered lienable work projects, and a mechanics lien can be sought. So you really want to keep in mind that when you have vacant land projects, there may have been recent construction, even though now you're looking at a parcel that's vacant. There could have been demo work that was done within the statutory lien period that you're not aware of. So it's important to be aware of if work has been done on the site, even if you are looking at a vacant parcel. Has demo been completed? If you're looking at an existing building, has there been any interior work or rehabilitation to the existing structure? It may not be readily apparent from the outside of the property, but if you walk inside the property, you're able to clearly tell that there's been recent work done. And the only way to really know that is if that is disclosed. Some excluded matters, again, statutes and case law will dictate in a particular state, but certain types of work that might not fall within the protections of the mechanics lien statute in a given state could be landscaping services, overhead and profit, restocking fees, attorney's fees, things of that nature. And then just improvements, quote unquote, I say quote unquote improvements. Many state statutory frameworks mention that improvements are not only buildings and actual structures that have been built, but may also include the delivery of construction materials, demolition, grading, clearing, excavation, site work, waste removal, and things like that. So just be aware that the definition of quote unquote improvements may differ from state to state. So what property is lienable? Generally speaking, it's the estate or interest in the property that's held by the party who contracted for the work. And so their interest would be what is subject to a mechanics lien filing. So on the slide here, you'll see fee simple interest, leaseholds, homeowners association property, condominiums, co-ops, easement interest, things of that nature.
Neil, one thing people need to be aware of though is that too varies from one state to another. For example, in some states, a tenant's lien may attach to the fee rather than just to the leasehold interest.
Correct. Do you want to take this slide?
No, you go right ahead.
All right. So again, there are certain nuances, as Nancy said. There are, if you're dealing with a commercial construction project, you will see tenant improvements from time to time, and state law will dictate whether those tenant improvements can attach to the fee interest, what requirements might be in place or what protections are in place for the fee owner in the event that there are certain tenant improvements. New development, so work being done on, say, a new subdivision, would work that's been done attached to just an individual lot or potentially to the whole development. So that's a issue that you should be aware of. And then certain government-owned property that's used for governmental purpose that may not be subject to mechanics liens. Again, very, very state specific and issue specific. Reasons one might file a mechanics lien. As you can see, there's a litany of reasons. I don't think that this is an exhaustive list, but we'll go through them quickly. Just construction contract change orders or upgrades. If you're looking at a construction contract, whether it's a guaranteed maximum price or subject to change orders, typically if there are changes that will increase, it typically increases, it may decrease the overall construction contract or the amount of the contract. But if there are changes that increase the costs, I think we just want to make sure that that's been accounted for, but that in the event that there are increases in costs, that can lead to mechanics liens. I mean, if it's not something that was anticipated or budgeted for at the beginning of the project, how are those additional changes and cost upgrades going to be paid for? Scheduling difficulties and delays, think of weather delays, acts of God, things of that nature that occur that delay the project, that can increase costs. And then potentially, we're talking about the viability of the overall project. It may bring the viability into question. Failure of the lender to fund a draw request, there may be reasons why. So anyone that's looking at a loan agreement, you will see there are certain conditions preceding to each advance of funds that the construction lender puts in place, certain requirements that must be met. If those requirements aren't met at a particular draw, the lender may withhold that draw. If that occurs, you may start to see certain subcontractors and contractors file mechanics liens. Failure of the owner or borrower to make the scheduled payments. If the borrower is not paying the loan, they may also not be paying their contractors. There are disputes. Sometimes there's a dispute between a contractor and a subcontractor or a supplier. There could be a dispute between the contractor and the owner. Any potential disputes, typically you might see the party that has provided the work or the services or the supplies, they may protect themselves by filing a lien, and then the parties will have to work it out after the fact. And then lastly, just the running of the statute, depending upon the state that you're in, if it's 90 days, 120 days, if the party that has provided the work or the services or the materials, if they haven't been paid within a certain period, and then they're running up against the statutory lien filing period in order to protect their interests, they may file a lien to protect those interests in the event they don't get paid after that. So. All right, we have a poll question. Jeremy, are you taking that?
Yep, here we go. Quick poll question. Make sure everyone is following along. What types of properties are subject to mechanics liens?
Or not subject?
Or not, trick. Thank you, Neil.
Yeah, sure.
I'm definitely off my game today here. I'm going to blame it on all the snow and the cold.
We got a lot of that.
All right, we got 97% government owned, not subject to mechanics liens. So people know their stuff, or they're following along. So we'll close this and get back to the content.
Thank you. All right, I'll turn it over to Nancy.
Yeah, we're going to talk a little bit about priority because this is a big issue for the title insurers in the room. But there's lots of different kinds of priority we need to talk about. The first is obviously the priority as between our mortgage or deed of trust that we're insuring and any potential lien claimant. In some states, there's a priority as between lien claimants, who gets paid first if there's not enough money to pay everybody. Sometimes it's an order of payment question. You know, do we pay the general contractor first, or do we pay the subs and suppliers first? Who's going to collect their money up front, and who's going to collect their money down the road? And last but not least, we have priority issues that come up when after construction has started or is completed, and we're still in that period when a subcontractor might file a lien and there's a new mortgage going of record, maybe the end loan or permanent financing. If you go to the next slide for me, please, Neil. It's really critical that you know the law in whatever state you are dealing with respect to priority, because it's very different. In some states, for example, in North Dakota or South Carolina, the contractor never has priority over the construction loan mortgage. Those are states where coverage is an easy question to answer. Then you have states like Illinois or Missouri where you never have priority as a practical matter when you have a construction loan. And you have states like Minnesota where it's a factual priority question. The first visible improvement triggers that. You have hybrid states like Iowa where once the mortgage is recorded, anybody who has already started work has priority for all of their work, and anybody who hasn't yet started their work is going to be behind the mortgage. And then you have states like New York or Wisconsin or Pennsylvania where you have what might be considered a safe harbor. Those are states where if you meet certain conditions, you will in fact have priority for the lender on their mortgage. Let's go ahead and go to the next slide. So we can really break it down into these areas where there's absolute priority. Another state where you'd have absolute priority is Florida, provided that your notice of commencement is recorded after the mortgage. You have the safe harbor states. We talked about those. You have good priority if those specific conditions are met. Wisconsin is an example of that. If your lender is a national or state chartered bank, they have priority. If, however, you have a private individual or a nonprofit corporation that does not meet that definition in the statute, they don't necessarily have priority, and then it's a factual priority situation. In other states, you have to be able to document in your files how you can establish factual priority, because mechanics liens will generally relate back to the first visible or physical improvement. The language varies a little bit from state to state again. And then you have a few states where you never, ever have priority for the lender, and the lien claimant will always have priority until after funds are dispersed and payment has actually been made. Let's go ahead and go to the next slide, if you would. So what kind of safe harbors are there? The race to the courthouse state, whoever gets of record first is going to have priority. There are also safe harbor states where there are statutory provisions that can be included in a mortgage or deed of trust that will in fact give priority. And then there are special places, and we're going to call out Texas for that where they just operate a little differently. Technically, I think you'd find that Texas is a factual priority state, but the way coverage is handled is very different. It's not generally provided until after loan funds have been fully dispersed. Let's go ahead and go to the next slide. We talked about this a little bit already, where these different states and this color coding on here, you can see what we're talking about. You're going to have priority if you meet it. In some states, you're going to have absolute priority if you're the right kind of lender. So just use it as a general guide. It's not a hard and fast determination. You have to actually look at the statute to make sure if you meet the requirements. Once again, priority can be determined at the time your mortgage goes of record. In some states, however, there is a provision that future payments may or may not retain their priority. And each state has slightly different law in regards to this also. It may depend on an optional obligatory provisions in the mortgage documents, mortgage loan documents. It may be a situation where the state statute just says you only have priority for what's actually been advanced before a lien gets filed or a contractor starts work. Let's go ahead and go to the next slide. Neil, I think this is you.
Yeah, sure. So a lot of when we talk about gap risk, you know, there are different gaps and that we are concerned about. I think the typical gap risk that we are concerned about in just maybe just a general transaction is, you know, the effective date of the commitment and then the date that the insured instrument is recorded. So how do we mitigate that gap risk in that instance, whether it's through a gap indemnity or dating down, getting a date down prior to or at closing. As far as recorded matters, there's that gap risk, and we're able to mitigate that risk by, you know, getting a title update and seeing if any matters are of record. The other gap period, I think, when we come into a construction loan transaction or that context is especially subsequent draws. When we're looking at draw packages, we may see a package of lien waivers. So we get the sworn statement, lien waivers package, that draw package from the parties, and we're reviewing them, or you're reviewing them, and you see the lien waivers are good through, say, January 1st. And, you know, the payment or the endorsement date is going to be January 30th. Well, we've got waivers from those individual contractors or subcontractors good through January 1st. We're paying them now, or the lender is paying them now, but they're still continuing to do work. So there is a certain gap risk there that is unaccounted for, but we're essentially, if you're looking at the cadence of a construction project and how subcontractors and contractors are being paid, typically there is some sort of a lag in the date of the lien waivers as opposed to when they're paid. And if they're consistently paid and there's been no issues, you know, are we comfortable with that gap risk? And then do we have, you know, is there an indemnity that we can stand behind in the event, you know, matters are found in the gap? And then lastly, we have the draw date. So the search date, if anytime we're issuing an Alta 33, and we'll get into this in a couple slides, before you issue the disbursement endorsement, you're going to do a title update. You want to confirm that there have been no liens recorded since the last draw or since the last Alta 33 disbursement endorsement was issued. So you have that search date. That search date could be good through, say, January 20th, but now payment is January 30th. For whatever reason, there's a 10-day gap in that particular situation as well. So we're not able to account for the 10 days when we actually issue that Alta 33 endorsement. Again, very fact specific, transaction specific, and party specific as to our comfort level with certain gap risks. Nancy, anything you want to expand upon on that?
No, I think you hit it well.
Okay. All right. So I guess general title insurance considerations. I mean, most of the coverages that are provided under an owner's or loan policy typically relate to insuring against matters that happened in the past and are recorded in the public record. So for example, you know, on this slide, you'd see easements, mortgages or deeds of trust. We've got covenants, agreements, things like that. If we fail to discover and take exception for any of these recorded matters, then there may be liability under the policy. So accordingly, a title insurer can reduce exposure to claims regarding these recorded matters by providing or performing a thorough search prior to insuring, and then making any appropriate requirements and taking exceptions depending upon, you know, the matters that are found in the record. In contrast, mechanics lien risk or mechanics lien coverage is one of the few matters where the coverage can relate to a lien not yet recorded or perfected. So that inchoate lien interest that we talked about earlier on, or it's a lien that is recorded after the policy is issued, which normally might not be covered under the terms of the policy, similar to like an easement that's recorded post-policy. But a search of the public records alone prior to the issuance of the policy, it might not be sufficient to eliminate the risk exposure for mechanics liens unless we take, you know, a general exception in Schedule B. So whether we're willing to insure against these mechanics lien risks, it really depends upon a multitude of factors, and that we're going to discuss later on. It includes priority issues, enforcement issues, and title coverage issues. So why should you care about priority? So in an owner's policy, we're going to quickly talk about the covered risks. Hopefully everyone on the call has read the covered risks in an owner's policy and loan policy, but covered risk 2 in the owner's policy, it provides coverage against defects, liens, and encumbrances. And then in a loan policy, you have covered risk 2, 10, and 11. So in the owner's policy, covered risk 2 insures against any defect in or lien or encumbrance on the title. Now, covered risk 2 includes a multitude of additional covered matters. It's a non-exhaustive list, but as you can see, it provides broad coverage. But in an owner's policy context, it typically or would not include any post-policy matters that would be excluded under exclusion 3D in the owner's policy. Loan policy, again, has the same covered risk 2, same non-exhaustive list of covered matters. Covered risk 10, lack of priority of the lien of the insured mortgage. So if there's an argument that there is a mechanics lien that's been filed that is seeking or making an argument that they have priority over the insured instrument, there may be coverage under covered risk 10. I think in the construction loan context, what we're really focused on is covered risk 11A. And that coverage, I'll read it, is the lack of priority of the lien of the insured mortgage upon the title A as security for each advance of proceeds of the loan secured by the insured mortgage over any statutory lien for service, labor, material, or equipment arising from construction of an improvement or work related to the land when the improvement or work is 1, contracted for or commenced on or before the date of policy, or 2, and this is the important coverage, contracted for, commenced, or continued after the date of policy if the construction is financed in whole or in part by proceeds of the loan secured by the insured mortgage that the insured has advanced or is obligated on the date of policy to advance. So this, especially in states where we can't establish rock solid priority for the mortgage, so any future advances in certain states will have absolute priority, but in those states where future advances or future draws do not have absolute priority, this is the covered risk that we need to underwrite and we are concerned with. And that's where the Alta 32 and the Alta 33 endorsements will come into play. So we talked about the covered risks, the general mechanics lien exception, and depending upon the insurer, the title insurer, the language may be a little different, but on this slide, you'll see the general or standard mechanics lien exception. Nancy, I think this is yours.
Yeah, it is. And I'm going to say that things have changed a little bit. I've been doing this for, hate to admit it, but over 25 years now. And my kids will attest to that fact. They swear my hair is silver. They don't use the terms gray or white because they're really good kids. And today, the normal coverage for a lender is what we consider incremental coverage. Usually that's provided through the Alta 32 series or First American. I always forget the number, Neil, I'm sorry, but there's a specific First American endorsement they can use to provide similar coverage. The CLTA 122, or in Florida through a construction loan update or CLU endorsement. And in Texas, they use a T3 to provide an advance of coverage, if you will, with each draw, provided that it acknowledges the amount that has been dispersed to date. You'll also find in many states and with many companies that will use a pending disbursement exception. I'm not entirely sure that that's necessary. If you carefully read the calculation of indebtedness in the definitions, in the conditions of the policy, because the coverage provided by the policy is only for amounts that are actually dispersed. And last but not least, and this is the way back before 2008, that's our kind of turning point, mechanics lien coverage was frequently provided by simply deleting the standard mechanics lien exception from Schedule B, and we frequently call that upfront coverage. Again, it's a little bit of a misnomer when you think about the rest of the terms of the policy. But what happened is, of course, 2008 hit, the housing market took a huge hit, and there were lots of construction loans that went into default and lots of liens that got filed because people didn't get paid, and title insurers spent a lot of money defending those lien claims and, in fact, often making payment on those liens. Because of that, we shifted from that upfront coverage to providing incremental coverage, but that also provides some real advantages to lenders in the sense that there is no room for dispute later about how much coverage was in fact in place when a claim comes up. Let's go ahead and go to that next line. And we'll talk about incremental coverage. What this is we provide coverage for what has already been advanced at closing as of the date of the policy. And then through the Alta 32 endorsement, rather than providing coverage for all future advances, we provide coverage through a coverage date that is provided in the Alta 33 endorsement with subsequent draws that increases the amount of liability under the policy with respect to mechanics liens. The policy amount is already there. Thank you, Neil. I got ahead of myself a little bit. And it insures against either invalidity or unenforceability of the mortgage lien through that date, but it also provides insurance for the lack of priority of the mortgage lien as security for that advance that has been made prior to the new date of coverage. And when we search the records, we typically use our search through date as the effective date or the date of coverage for that Alta 33 endorsement. The First American endorsement, I believe, works similar, if I recall, Neil. And I know the CLTA 122 works very similarly as well. Let's go ahead and go to the next slide. There are 3 different types of Alta 32 series endorsements. The Alta 32 provides coverage with respect to liens for the charges related to that lien were designated for payment in documents supporting the advance dispersed by or on behalf of the insured on or before the date of coverage. Now, the Alta 32.1 and Alta 32.2 provide a little more limited coverage. Typically, this is the 32.1 will often be used when the title company is actually monitoring or making disbursements for you, because it is to the extent that direct payment to the lien claimant has been made by the company or by the insured with the company's written approval. And that can be used if we're paying subs. If we're paying the general contractor and the general contractor is going to pay the subs, we need to be using the Alta 32 if that type of coverage has been approved. Otherwise, in some cases, the title company won't be involved in the draws other than to do the title search, and then frequently the Alta 32.2 is used, and that provides coverage to the extent that direct payment to the lien claimant has been made for those specific charges, but I don't really care who made payment to them. Neil, anything you want to add there?
Nope, I think you had it.
All right, let's go on to the next slide. All right, the Alta 33 changes the date of coverage. As a reminder, the date of coverage is not the date of policy. The date of policy is the status of title. It is all of the off-record matters. The date of coverage is simply limited to mechanics lien coverage. So when we advance that date, we're basing that on our searches. It should also include the amount that is dispersed with the current draw and the aggregate amount dispersed to date. Every once in a while, we get those numbers off. Usually it happens because there's been an advance in between, maybe for lenders' monthly payment for interest payments, and that didn't get disclosed to the title company. So there may be times we have to coordinate to get those numbers accurately reflected. This endorsement, other than as to mechanics lien coverage, does not move the effective date of the policy with respect to any off-record matters or any on-record matters other than mechanics lien coverage. Let's go ahead and go to the next one. Some title insurers, some title agents want to use a specific mechanics lien endorsement on Schedule B that reads like the normal mechanics lien exception and goes on to say, except as insured by the Alta 32 and modified by the Alta 33 endorsement. Not all insurers will require that. It's a way of making it very clear to everybody what coverage is being provided. Let's go ahead and go to the next one, Neil.
So the pending disbursement provisions, I know, Nancy, you touched on it a few minutes ago. I think, and Nancy did a great job of talking about it, the pending disbursement language, you may see it in certain states, certain limited states, whether it's absolutely necessary or not. I think the conditions of the policy speak to any potential loss in the event there is a loss, but You will see certain pending disbursement provisions in certain states, and really the coverage is limited to the amount dispersed at closing, or and then as disbursements are made. I would say, well, I'll leave it at that. Sorry. Be careful with certain endorsements. There are some endorsements that may or could restore priority coverage. Think Alta 14 series. There's coverage in Section 5F of the Alta 14 for mechanics liens, or if you remove Section 5F, you are essentially providing coverage because that is an exclusion in the endorsement. So if you remove Section 5F, there may be coverage for those mechanics lien coverage for those future advances. There are other types of revolving credit endorsements, and I think the big one for me, because I think we've seen certain Alta 11 or Alta 11 modified modification endorsements more frequently over the last several years. In the context of a construction loan or a construction project, if there's a modification of that loan being recorded and you're being asked to endorse the existing loan policy, I think you want to be aware of the coverage that was provided at the outset under the existing loan policy. And you don't want to, if construction is still going on, you don't necessarily want to be, or you want to be mindful of modifying the coverage. We want to be consistent with the coverage that's been provided. And now if construction is completed and we're outside of the lien filing period and we're able to document that and underwrite that, there's a possibility of modifying that coverage through the endorsement. But again, very fact specific. There are certain modified Alta 11 endorsements out there that will bring the data policy forward, not just the date of coverage, which we've talked about through the Alta 32 and 33 endorsements that pertain to mechanics lien coverage. But by bringing the data policy forward, you may be bringing that coverage forward as well. So something to be aware of.
Neil, I think it's also important to remember when you're doing a modification, especially if there's additional money that's going to be available, you may be doing mechanics lien coverage analysis just as if it were a brand new loan, because if the new funds are going to be used for work, or if work has been performed or is being performed, we have all of the priority issues that we've already talked about as to that new money.
Yes, certainly. All right, the last way of providing mechanics lien coverage. Now, if we're able to document or underwrite the project where we have, again, we can establish the priority of the insured mortgage or deed of trust as of the recording of that instrument, we may be able to provide upfront coverage, and as we say, quote unquote, upfront coverage, just the removal of the standard mechanics lien exception. Again, very state specific, fact specific, and really you want to document and be able to establish that, upon the recordation of that insured instrument, we have priority, and any subsequent draws, any future draws or advances will have priority as of the date of the recording of the mortgage or deed of trust. I think we have another poll question. How much time do we have?
Yep, we do, Neil. And yeah, we are getting up to the top of the hour. So we'll probably be fast and furious on a few of these slides. Quick poll question: which state gives authority to the recorded mortgage against subsequent mechanics liens? This was on a slide a little bit earlier. Kentucky, Ohio, Indiana, or Wisconsin? Give you a few more seconds here to get your answer in. And the correct answer is Kentucky. So it was close between Kentucky and Wisconsin there between the polling. So, all right, Neil, back to you.
Sure. All right, how to tell the story and what documents are needed. And Nancy, I'm going to turn this over to you.
Yeah, let's go on ahead to the next slide, actually, because this one relates to what we used to do. Today, when we look at mechanics lien coverage, we're really trying to focus on how viable is this project and can we manage the lien risk in a reasonable way. So we want to know, do we know the parties, the builder, the contractor, the borrower, the lender? Does this project make sense, and do the numbers make sense? We also look for whether the project is in balance. That is there enough funds available and set aside to pay for all of the improvements that are anticipated? Sometimes we look at equity. What's the loan to value? The higher the loan to value ratio is, the harder it is to look at that as something that mitigates risk. And then we'll ask the question, can we prove priority? This gets back to that question of what kind of a state are we in? Can we establish absolute priority? Are we relying on factual priority? If we're relying on factual priority, how can we document it? And then last but not least, we ask the question, do we have one or more indemnitors who are adequately liquid that if something goes wrong on this project, because, you know, very few construction projects go exactly as originally planned, is there somebody who can step in and fix things and make sure there's enough money to make the deal still go forward and the project get completed? Let's go ahead to the next slide. These are ways that we can mitigate our risk or manage our lien risk when we provide coverage to a lender. We can document. Priority pictures are wonderful as long as they actually show that no work has started. Having good indemnities, that might be from your borrower, it might be from the guarantor, sometimes it's from the general contractor. All of it is very fact specific. And last but not least, using that incremental coverage as a way of managing risk. So how do you tell the story? And we'll go to the next slide, Neil. If you're sending a deal to me to look at, I want you to tell me what the deal is. I want you to tell me the story of this project. Tell me who's involved, what's being built, what's it going to cost, where's the money coming from to pay for it, how long is it going to take to get it completed, and how do we plan to address draws as we go through the construction loan process. Let's go ahead and go to the next slide. If you download the handouts, you'll have this short list. This is a short list of what is often requested and used to evaluate the project for mechanics lien coverage. Often this is enough. Sometimes it sparks additional questions and we end up asking for more documentation than that, but this will give you a great starting place. Neil, anything you want to add?
I think in addition to these documents too, I think oftentimes, at least for me sitting in my chair, and others can do this too, I mean, simply Googling the parties, Googling the project, trying to do your own research, at least understanding who the parties are, who's the GC, the project as a whole. You know, you might not find any information, which I think the lack of information can be a positive factor. But you might find certain news articles about the project as a whole. I know, say we're talking about data centers right now. I mean, that's a hot button topic around the country. There's a lot of data centers that are being constructed, but you have certain pushback, local pushback. You know, not in my backyard, litigation that's filed, or parties that are trying to stop the construction. I mean, if a project is stopped, that goes to the viability of the project as a whole. And viability is something that we are looking at when we're underwriting the deal. So any information you can find, you know, on the internet can be helpful information. It gives you a little more background into the project and the parties. Absolutely.
And with that, we're going to say thank you to everybody for your time and attention today. Jeremy, we'll turn this back over to you.
Oh, all right. Well, thank you, Nancy and Neil. A lot of great information and guidance on how to you know, address mechanics lien concerns in a variety of settings. I guess I can turn my camera back on here. So there we go. I did put in the chat box the link to submit information for CE and CLE credit. I don't know, Neil, Nancy, if you have a few moments, we want to spend a few minutes for Q&A. If you do, pop them in the chat box. We can pitch them over. Otherwise, we'll kind of wrap up. I'll keep an eye on any questions that come in. If you missed any missed parts of today's webinar, I think others in your office would benefit from listening. The webinar was recorded, and you'll get a link to the recording tomorrow. There'll also be a link in that email to download a copy of today's presentation if you didn't get it from the handout section. I do need to thank DataTrace once again for sponsoring today's webinar. One quick question on the map from, you guys probably know Joe Powell. The map, is there a key to the different colors on the map, or is it intended not to be exact?
It's not exact.
Okay, there you go, Joe.
We have our own internal key, so to speak, but yeah, it's not exact.
Okay. All right, and someone said they couldn't click the link. The link will be in the email tomorrow as well to submit the CE/CLE information, so don't worry. With that, again, Nancy and Neil, thank you for your time, and that will bring us to the conclusion of today's presentation. Take care, everyone.
Thank you. Take care.
Thank you.